What's up, everybody? Welcome back to the Financial Clarity YouTube channel. And we had a strong jobs report this week, and the stock market and crypto market is still falling. We're going to go over the reasons why it's still falling for technical and fundamental reasons. In a nutshell, this means higher interest rates for longer. A strong jobs report means the Fed may pause 2 back-to-back meetings. Let's talk more about that as we get into the video. So this is Forex Factory. We're going to go over all the job news we had for this week that just passed. So on Tuesday, January 7th, we had a job report. The forecast was 7.73 million jobs to open, and they opened 8.10 million jobs. So that's more than forecast. That's good for the currency, right? So that's a good news right there. So ADP, non-farm employment change, is a little bit lower. We had 122K people unemployed compared to 139K, which is forecast. So we had less than forecast, so there's actually less people unemployed. So that's not the best, right? But unemployment claims, we had less unemployment claims, right? We had 201K unemployment claims compared to 214K. So this is mixed news. So far, we had a lot of jobs added, right? And we had mixed news with unemployment claim and ADP. So the final news that really came in good was this Friday. This is what took the market lower. Non-farm employment change. We had 256K jobs added. This is double the amount. So this showed a big boost in employment in the economy. And employment is the number one driver in the economy. That's what shows a strong and resilient economy. So what that did is that made the Fed want to pause interest rates even more. So this is the Fed rate monitor tool. So the next interest rate meeting is January 25th. If you look at bar chart, you can see the current Fed's fund rate is 4.50. So that's the current rate right now, right? So when you go back to the Fed rate monitor tool, you can see that the Fed has a 93% chance they're going to pause interest rates at the meeting January 2025, right? January 29, 2025, I'm sorry. So that's already bearish. So the market was already dropping for that. So now we had a strong job report come out now, right? They're like, okay, these job reports are strong. So the Fed don't need to cut rates at the next meeting. Everything's looking good in the economy, right? So the 19th is the next meeting, the 19th of March, 2025. And there's already a higher chance, 56% chance, that the Fed may not cut interest rates again. So we may have 2 back-to-back pauses, right? And that means higher interest rates for longer. So this is how this is reflected in the market, right? So as you come to the market, this is the S&P 500. You can see we're coming down. This is the weekly time frame. Each candle equals a week. We're coming down to an oversold RSI reading, which is good for buying opportunity, right? The NAS 100 is coming lower. The NQ, ES, we're all coming lower, right? And they can go even lower. If I go on the SPX chart and I put my Fibonacci tool on it, right, and I measure from the swing low to the swing high, you can see from the low to the high, I already have the tool up there. Act like we don't see this white lines, right? Because I use this in my morning calls to teach my people in my academy, right? But we can come all the way down to 550 on the S&P 500. That's possible, right? I'm not saying we're going to get that, but it's just possible. So we got to keep that in mind. So from a bear standpoint, we can come down to 550, but when we do to retest this level of resistance we broke out of, we're going to bounce and go higher, right? So that's going to give us buying opportunity. The S&P 500 is almost oversold, so it's almost time. So I'm saying, okay, maybe the next 2 weeks or week or so, the market will bounce. But the reason why the market is dropping now, it got more fear that the Fed is going to keep interest rates paused. So that means higher interest rates for longer. That's the point of this video. That's why the market's dropping. I hope this video helped you guys with some clarity in the stock market. The stock market follows the Fed lead. So if the Fed is pausing interest rates and the interest rates is currently high, it's going to give a bearish signal. If they start cutting rates, we can get a bullish signal. The market ran up in 2024 based on interest rate cut hype. So we're just doing a slight correction, guys, to go higher. Nothing to worry about. Want more videos like this? Don't forget to subscribe, turn on your notification bell, and follow me for more. Thanks. See you guys in the next video.